Welcome back to Investing Talk Podcast.
Today, we're looking at LM Funding America.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. LM Funding America has made this really significant strategic shift. They're moving toward a dual revenue model.
Okay, dual revenue.
Right, so it's combining their, let's call it legacy specialty finance business with a new high-growth Bitcoin treasury and mining operation.
All right, let's unpack that a little. What does this dual model actually look like on the balance sheet? I mean, are we looking at a miner, a finance company, or both?
It's increasingly a Bitcoin play. That's the real story here.
The mining is taking over.
The mining segment is absolutely the core growth driver now. And what's really fascinating is that the mining operations are already profitable.
On their own?
Yes, on an operating income basis. And this creates a kind of a self-reinforcing flywheel.
Okay, a flywheel. How so?
Well, the mining generates incremental Bitcoin and, of course, cash flow. That cash then offsets the public company overhead and funds more Bitcoin accumulation.
So they don't have to keep going to the market for capital.
Exactly. It reduces their reliance on external capital.
Okay, this is where it gets really interesting, I think, for anyone looking for value. When we look at their assets, specifically their Bitcoin treasury, what does that tell us about the current valuation?
This is the critical point. It really raises this important question about an extreme value disconnect.
How extreme are we talking?
Well, as of November 2025, the company held 301.8 Bitcoin. At the time, that was valued at approximately $27.5 million.
Okay. And per share?
When you calculate the Bitcoin value per share, it sits at around $2.25.
$2.25. Yet the stock has recently been trading, what, around $1?
Between 99 cents and $1.10.
So wait, the market capitalization is less than the liquid Bitcoin assets they're holding. That means investors are essentially getting the entire mining infrastructure, the machines, the facilities, the future growth potential for free.
For free, or even at a negative value. That's what the numbers imply.
How is management even addressing a gap like that? I mean, that's huge.
Management has been actively trying to arbitrage this disconnect.
What have they been doing?
Well, in 2025, they executed a $21.3 million capital raise. The key here is that the majority of those proceeds were immediately deployed to purchase additional Bitcoin.
So they doubled down.
They doubled down. It signals huge confidence in their treasury strategy. And on top of that, they've authorized a $1.5 million share repurchase program.
A buyback.
A buyback. And they've already repurchased over 3.3 million shares and the associated warrants. It's a very strong signal of insider confidence that the stock is undervalued.
That definitely shows shareholder alignment. Okay, let's pivot to the operational side for a minute. What's driving their capacity and their efficiency?
The key catalyst here is operational expansion. It's happening fast.
What's the biggest piece of that?
In September of 2025, the company closed the acquisition of an 11-megawatt mining site down in Mississippi for $4 million.
An 11-megawatt site. What does that do to their total footprint?
It immediately expanded their capacity footprint by 42%.
Wow.
And they're also advancing a 2-megawatt immersion expansion in Oklahoma, and for that, they're using high-efficiency Bitmain S21 miners.
The new ones?
The top of the line. And that's expected to increase their total hash rate by nearly another 10%.
Okay, so massive expansion. What's that doing to their cost structure?
This is the other side of the coin. We've seen consistent margin expansion.
So costs are going down even as they grow.
That's right. Their direct mining margin improves sequentially from 38.5% in Q1 of 2025 all the way up to 49% in Q3.
That's a huge jump in efficiency.
It's critical. And there's another really fascinating detail here about how they monetize power volatility.
How do they do that?
So in November 2025, they actually curtailed their mining operations during power spikes and sold the energy back to the grid.
Really? They just flipped the switch off and sold the power?
And generated about $76,000 in energy sales alone from doing that.
That turns a risk, a power cost risk, into a flexible revenue lever. That's smart.
It's very smart.
Okay, so what does this all mean for the immediate future? We've got strong asset coverage, we have expanding operations, but they are still a microcap company. What are the key risks we need to consider here?
If we connect this to the bigger picture, The primary risks are pretty standard for the sector, but they're magnified by their small size.
Okay, so what's number one?
Risk number one is Bitcoin price volatility. I mean, a 30% drawdown in the Bitcoin price would materially impair that $27.5 million Treasury value.
And it would crush those great 49% mining margins.
You would compress them very, very quickly.
And what about company-specific risks? They're in a huge growth phase. That has to come with some execution risk.
That's risk number two, execution and financing. On a GAAP basis, LM Funding America is still reporting net losses.
Right, you mentioned that Q3 2025 had a net loss of what, 3.7 million?
Correct. And while the mining segment itself is cash flow positive, the overall corporate structure is still burning capital as they scale up.
And the financing.
Plus, you have this significant dilution overhang from a recent warrant reset.
Explain that.
It established an exercise price of 97 cents per share, which could potentially add 15.5 million shares to the count.
15 million shares. That dilution is real.
It is.
But the company's share repurchases and the current trading price, which is still above that 97-cent level, that suggests that maybe a lot of that risk is already priced in by the market.
You could definitely argue that.
I mean, the stock is trading near its 52-week low of 89 cents. The combination of that warrant reset and the buyback almost acts like a capitulation low signal, doesn't it?
Exactly. That's the technical argument. The technical indicators show the stock is trading well below its long-term trend.
The 200-day EM.
The 200-day exponential moving average, which is sitting around $2.79.
So that sets up a potential mean reversion trade, if.
A big if. If these operational catalysts, like the full ramp of the Mississippi facility and the Oklahoma expansion, if they deliver in the next few quarters.
So the final takeaway here seems to be that LM Funding America presents this interesting high beta opportunity. You have an equity structure currently valued at less than half of its liquid Bitcoin treasury alone.
Right.
And at the same time, you've got significant operational upside from high-efficiency mining expansion and a management team that's actively using buybacks to capitalize on this undervaluation.
You get the assets plus the mining growth optionality, all at a deep discount.
It seems like it.
So this raises an important question for you, for the listener. How much value do you place on owning a piece of a company that is actively leveraging a large treasury to fund further high-margin asset accumulation?
Definitely food for thought. If you want more in-depth analyses like this, make sure you hit that subscribe button wherever you listen to your favorite programs. We'll be back next time with another analysis.